This is brought to you by Forethought, building AI agents for every customer moment.
All right, back with some of the biggest venture heavy hitters around. So super excited to have you guys all here. Obviously, sort of a lot going on. This is really our look at the investing landscape. I just wanted to start off, what is a domain right now, an area, probably in artificial intelligence, doesn't have to be, that you're really excited about, that you're digging into, just like one lane that you're sort of excited about at the moment, and you're right here, so do you want to go first?
Sure, happy to kick off. I guess we've traveled a huge distance from the launch of ChatGPT, building all the infrastructure, and then the move to applications. I mean, it's been a year and a half or so. And specifically for Europe, what I'm excited now that we are at this application level is actually the traditional industries that are getting changed. Pharmaceuticals, banking and finance, lending, industries like manufacturing, automotive, defense, and so on. I think those industries have historically been slower to adopt any new technology, but now it's become really a necessity for them to keep up, certainly on a global scale.
Applications in old school businesses. Are the applications replacing those businesses or selling to them, or both?
AI being used as an enabler. So take a pharmaceutical example, which I guess, Tom, you know a ton about, protein synthesis. You could spend $100 million developing a new protein variant. You could be experimenting manually. You could be in labs, or you could use AI in companies like Cradle and others in the industry to shortcut that cycle, that development cycle, and reduce your cost by an order of magnitude.
Tom?
Love the answer. So look, the global economy is about $100 trillion, and it's just not fully digitized yet. AI is going to unlock that low friction. So we've been asking, like, what applications are good enough today? So we started with law, invested in Harvey, Law Hive, coding as well, which these guys have phenomenal investments in as well. I'd give you a slightly different answer as well, which is, I think every time you have a new sort of technology, there's a new interface that arises to sort of leverage it fully. So with the personal computer, you had the GUI. With the smartphone, you had touchscreen. And I think this is clearly going to be an era of voice, which is really interesting. So we've been investing in that space where we think voice is really high throughput. I look at my kids, they send voice notes on WhatsApp all the time because it's really quick and really efficient. Some of our investments in that would be really high bandwidth, like Neuralink at the speed of thought. We have a stealth company in Israel that's doing sort of pre-vocalization or silent speech, which is interesting. And then actually our investment in Nothing here in London is related as well.
A lot of this is voice without voice, or it's sort of voice is too slow, we need to be faster than that.
Yeah, absolutely. It's voice. It's actually an incredibly high throughput way of communicating information. And so, you know, it just so happens that it's also probably the optimum, as you've seen with all of the chat interfaces for LLMs for the time being. So we're really bullish on that space.
Philippe?
Yeah, I mean, I echo everything that has been said here. I think it was very interesting with AI to see how kind of 3 years ago it was all about the infrastructure and the model. Then now it's about the applications. And I think in the application, one area which I think is very exciting right now that we haven't mentioned is cybersecurity. And AI is really transforming cyber.
It's creating the problems and solving the problems.
Exactly. And you have companies like Cyera who are really focusing on data and AI security, which are really doing very well, because that's the #1 problem for CISO. It says, well, data is growing, data is even more valuable, and now it's really at risk. And I think after that application phase, I think what's going to come, I think in the next 12, 24 months is like more the automation side. And how do we start to automate task and workflow in the core enterprise? And right now, I think we're seeing enterprises are dabbling with it, and you have some smaller projects and POCs. And I think the next 12, 24 months, I would expect much bigger chunks of task and workflow to be automated. I think same way that RPA in 2017, 18 really started as a big way. We say, well, RPA still remains the best way to automate repetitive tasks, but they needs to be the same. But if they're the same, this is the cheapest, most efficient ways to do it. But then there are other tasks which are more complex, where the outcome may not be always the same. That requires AI.
What's the mood on, I guess, how much software is screwed, right? You see, we had the Klarna CEO being like, oh, we're going to be able to build everything ourselves. I mean, I hear even in cyber, there's almost an argument like we need to be so fast. I forget if it was Abnormal Security I was talking to a couple months ago. It was like, oh, we need to move so quickly because people are going to be able to spin stuff up. I don't know, just the general, whoever wants to jump on it, but like the view on whether you can invest in software companies or your own companies are going to build the software themselves.
Yeah, AI is here to solve a lot of these problems we're discussing, but back to cyber, it's also generating problems. Tom and I are fortunate to work with a company called Resistant AI, and actually it's recently seen a massive takeoff because the surface area of fakes, of fraud, of falsified documents, of falsified identities has expanded exponentially. And so at some point, I recall sort of what I learned in payments a decade ago. It's just the cost of doing business. There's a certain amount of fraud that's always going to be there across credit card networks. We want to optimize the total net revenue. At this point, it's moved to a different dimension. So the problem has grown exponentially, and with that, I think you need some more intelligent solutions. So there's always an opportunity.
Right.
Yeah, related thought. I think you get phases with the rollout of these technologies, and at the moment, much of their code is quite superficial. It's almost creating an explosion of technical debt, I think, at the moment. Like, you see amazing examples.
You're like, they need to buy a lot of things. They're creating a mess inside their companies.
And I don't believe that software will be completely kind of compostable. It's got to stay composable. It's got to stay so that actually the foundations will be built. So the next phase, I think, will be people addressing the fact that when you do vibe coder project or you do work with Cursor and it cross-references libraries or open source, they've got to be ones that we really believe in. So all three of us have invested in a company here in London called Tessel, Guy Pajani's new company, where he's addressing exactly that. Like, these projects have to be reliable. They have to be built for the long term. And I think that's the next phase that will fall through.
I think this is a question, right? $10 billion question, which is like, you look at Workday, for example, and can you say, well, tomorrow can someone do Workday? Or can you imagine even a Workday where basically, which is a very simple software, but every user will say, instead of configuring a complex solution, will say, oh, I need to integrate with this, pull the data from that, show me this report, and dynamically the AI will create the code for that. Potentially that's the vision of the future. I think we're very, very long way from that.
I don't want to spend a lot of time at this conference being like, why London? Like, I live in New York, I host events in San Francisco, we're in London today. Like, I think the pandemic made everything global and it was easy to build businesses all over the world. But I do, that said, I will ask the sort of why London, or what, the question really is like what you think the opportunity specific to London is and where founders should really be here. And then I guess the American hubris, like when should they really be racing to America versus focusing in local markets?
Yeah, you would probably expect we would say this, it's all about talent. London has been the hub for not just London born and bred talent, but also sort of the European capital. Sorry to all those from Amsterdam, Paris, and Stockholm, but it is a bridge across the Atlantic. And
how many people here are based in London? Raise your hand.
Oh, there we go.
And how many are not based in London?
Minority. Yeah. So there you go. London has a lot of talent, but also with that comes the ambition, and things, as has been mentioned, have been accelerated. So the speed with which companies are funded, speed with which companies launch, and the speed with which they have to get to market, in some sense, it is that speed of iteration that is the moat. Certainly in the early experimental cases where the customer has 5 competing solutions and each of those 5 providers is 1 year old.
Right.
So you have to have speed of iteration. You have to raise capital fast. You don't have the luxury of time. And in some sense, that forces those companies to look big from the get-go.
Right.
And get on bridge to bigger
So you're saying
markets.
if AI in particular is a race, you need to go global pretty fast.
Pretty fast.
Tom, I want to ask you specifically. I mean, you're part of the Alphabet empire. Is DeepMind like a good source of startups, or like has it underperformed, I guess, the level of talent and sophistication in startup creation? Or what's your view on the track record in terms of DeepMind and spinning off startups?
So I would say the jury's still out. These companies are moving quickly, but the great news is there are world-class scientists, researchers, and applied engineers at DeepMind that are just learning how to build at the very sort of Pareto front of these models. And they're still, most of them, in DeepMind and enjoying it, although there's a lot of movement between all of these companies. For each of those, I think you get this kind of multiplier effect when they leave. So I don't think we've seen any of the sort of really big companies that we would expect come out yet. Maybe the one that we're most excited about is Isomorphic, which is the protein folding business that we spun out not so long ago. But
Spun out with the leader of DeepMind, or a fascinating situation.
No, Demis is one of the smartest people I've ever met. He works across both of those businesses, and I'm confident that clock speed won't be kind of compromised at all. He's amazing. But back to Jan's point, if you look at London, I think building businesses in Europe is building them in hard mode versus the US. But London, it's less hard. Because, there's great capital here. The founders will start businesses everywhere, but for every single great founder, you probably need 5 or 10 world-class operators, and there's more of them in London than any other city in Europe at the moment.
Philippe, anything you'd add there? Maybe either like categories you think in particular that there's an advantage here, or anything else?
Well, obviously, London has a privileged place in Europe, but I would say it's not the only ecosystem in Europe with very strong AI talents. I mean, look at Paris. I mean, this is where Meta founded Fair with Yann LeCun, etc. I mean, there's very, very great depth of talent. I'm not saying this because I'm French, as you probably get. But you look at Germany.
We thought about doing this in Paris, but it just seemed like too hard. Like it was enough different continent, different language seemed challenging.
But you look at the LMU in Munich. I mean, this is the lab where Stable Diffusion was invented. I mean, Stable Diffusion is at the base of pretty much all the image AI model, and that's the discovery from Germany. So I think Europe has a very, very strong voice, I think, to play and a lot to say in the AI world.
And are you betting just like quickly on local heroes, or like especially in the foundation model game, there's like the bet of, okay, the government basically is going to want some hometown hero, and therefore there's an opportunity, or is that not big enough for the most part?
Well, I mean, I think there is defense, which is a very separate sector where I think there are some very European-centric dynamics, which I think are playing out, and where the European market is big enough to create like big champion and a lot of value. I think if you look at Europe today, yes, I mean, you have foundational model. But if you look at what's being done in the rest of the world, with tens, hundreds of billions of dollars invested, we're not seeing this in Europe. But what we're seeing in Europe is great companies that are building on this model. I mean, you look at Synthesia. I mean, Synthesia, AI Avatar, they're the leader globally. No one has done this. You have 11 labs. You have Lovables. So Europe is capable of generating real global leaders in AI, and I think it's just the beginning of the cycle.
And Philippe, I would actually include Mistral in that category. And to add to the French list, to be respectful, there is hard evidence that the regulated industries they play into, specifically two of those, banking and healthcare, are siloed. And as much as we would love to sort of cheerlead, those industries do have government regulation, and they do have governments overseeing, and especially as your AI moves more to the front line, so in the case of Alan, moving from back office to sort of processing tasks to all the way doing medical triage, where the sensitive sort of HIPAA equivalent sort of patient data, you really have the regulators breathing down their necks and saying this has to stay in Europe.
For venture to work, we need exits. We've obviously got this sort of very enticing exit with Scale in the news, and clearly there are a lot of high salaries also being thrown around. But it feels, in venture overall, there's never enough. We'd always like more of them. I mean, how much can you, I guess, invest in companies on the back of these licensing acqui-hire deals? And then what do you see as sort of the best exit opportunities right now? And if you're not conflicted, you can touch on the scale thing that some of you are. But I'm just throwing this out.
I'll take a $15 billion, whatever license, however you call it, deal any day.
Is that, well, I'll ask you, is the 15 billion, that's really the money, and the rest is like maybe?
I mean, the rest is a standalone company that's going to continue to operate with a CEO, customers, etc. And then
Tom, how much is it worth as a standalone?
A lot less than 15. These guys invested in it. It was a phenomenal and is a phenomenal investment. And I think we've seen a new pattern of a sort of glorified acqui-hire. So to me, this is a sort of $15 billion acqui-hire. We're seeing a lot of the customers move away for obvious reasons, like Snorkel in our portfolio is getting a lot of inbound because of it. But I actually respect Meta for this move. It's a critical time. You're as good or as bad as the team. They lost their head of AI, was it 3 weeks ago? And they've now brought in a world-class operator that understands the secrets of, LLMs and Gen AI in Alexander Wang. And $15 billion is a lot of money, but what is it? It's 1% dilution or something? I would take that bet if I was that team. So I don't know how well the business will do on an ongoing basis. It might look a bit like Inflection did when they sold in a similar deal, and we didn't hear so much from them afterwards. But phenomenal investment for these guys, $15 billion. If you just wind back the clock 5 years ago and say $15 billion exit, it would have absolutely blown our minds.
God, insanity.
And now we're talking about it. We've just had a kind of recency bias of an OpenAI round where it doesn't sound like a lot of money. It was a phenomenal deal.
Eric,
let's not short the future. Time will tell.
Okay, yeah, time will tell.
Eric, I love your, if you're trying to create a rule, are we going to have more of those? We'll take your optimism, but to more than agree with the premise of the question, the economy does need some exits, and the ecosystem needs some exits. And I mean, to take it even further, some sort of recycling of capital and moving on forward is the essence of realizing ambition for entrepreneurs, and sort of putting the capital and talent back into the startup ecosystem. So, are we working hard to move our companies along? Yes, we are. But obviously, a lot of the exit activity has historically been on public markets, and that's been challenging. Looking backwards, let's hope it's more positive looking forward.
Yeah, do you want U.S. regulators to be chiller here, or I mean? Yeah, is it a regulatory problem with IPOs, or you think it's a company quality problem?
Well, it's been we don't have the time to sort of analyze.
That's a big question.
But in 2 sentences, the bar has gone up in terms of market cap because of float, research coverage, what's economical for the underwriters to bring to market. Yeah. So in some sense, the pool of attention of both human time, analysts, buy side, as well as capital has shrunk, and as a result, the bar has risen. And the flip side of that is the activity in private markets.
Yeah, well, I think I would add the geopolitical uncertainty, which is a huge thing, right? I mean, you need markets, you need low volatility to go public. And right now, I don't know what the volatility is, because we have been living in high volatility for a very long time.
Right. What about, Philippe, like private to private, and specifically like OpenAI? I mean, it's so valuable, but you're getting these weird shares. Like, I don't know, do you think OpenAI can be part of the solution here and private to private deals? Databricks has certainly done a number of deals.
I mean, I think private to private are one part of the solution. But I do think we're going to see, I think we need the public markets and the geopolitical environment to stabilize. Like, hopefully there's signs that this is going to start to happen. I think once this happens, I think there's a very high number of high-quality companies that are just waiting to go public, and that's going to provide a good amount of liquidity in the system. I think for the strategic acquisition in AI, I think we're going to continue to see more, because a lot of the big companies are seeing that they are missing these AI talents. And even if Meta is ready to do some bold move, and Meta is, I mean, everybody says, oh, they're behind, but they're still very good in AI, right? And so we'll see a lot of other companies saying, okay, now we
Apple
really need to
clearly needs to make a move.
Yeah.
Last question, quickly. Technology is a boom and bust sort of business with hype cycles and corrections. Where anyone brave enough to sort of chart out or say where you think we are in this boom and bust cycle? How much do we have a lot of juice over the next 12 months to keep investing aggressively on the AI thesis?
Definitely an optimist on this one. I go back to the traditional industries, fintech, banking. Lots to be done.
Checkbooks open, you agree?
Yeah, so the drivers for me are, is there a capital? There absolutely is. And if the IPO window's open, there'll be more in the private market. And then secondly, do we think that the models and the tech is getting better? And I think there's no end in sight. Pre-training and post-training. And then now with reasoning, there's more progress. So
right, at our conference in November, we were all worried about a wall. And then post-training, I think in particular, showed with reasoning models, there's plenty of improvement. Philippe, last word.
100%. Yeah, I think there are two things. There is a cycle in prices, which may go ups and down. But I think the secular shift with AI is here for the next 10 years. I think we'll have a lot to invest in for the next 10 years plus.
Great. All right, that's our panel for the morning. Riley is going to explain what's next.